First off, it's the FAANG Stocks. And I know, it's not sexy, but as I said, if we have learned anything from the time that we are in now, it's that these companies cannot be killed and are absolutely worth buying the dip on, in my opinion. Stocks went on sale today as the Dow plunged as much as 800 points as of this recording. Cases of the Rona appear to be increasing in certain states in the southwest area of the country. So I guess there's nothing left than to just sell our stocks, right? What's going on, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I believe this channel can help you own it. Crazy and chaotic indeed, guys. Whew, this week has been absolutely nuts, folks. First, the China deal is off, and then futures go down, and then it's back on, and then futures go up. And then Fauci says there could be a vaccine for the Rona, and so the markets go even higher. And then today, it's that cases are way up in certain areas in the U.S. So what happens? The stock market says, okay, that's it. We've had enough. The market tanks right out of the gate this morning, right? And everyone goes straight into panic mode. Stocks slid sharply this morning due to California, Texas, and Arizona posting their largest daily case additions so far as of Tuesday's counts. Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases, said yesterday before the House Energy and Commerce Committee that the next couple of weeks are going to be critical in containing the Rona in states in the South and West where surges have appeared. However, state and local officials seem to have dismissed the idea of shutting down their state economies again, with Texas Governor Greg Abbott saying that a new lockdown would be the last option. Fauci also added during his testimony that states might not require going back into an absolute lockdown to contend with the latest rising cases, which is likely a good thing, and in no way, shape, or form does this mean a repeat of March and April. Thank God, right? If you're all on board with that, give this video a thumbs up. And despite uncertainty around the Rona, stocks still closed higher yesterday, and it was helped in partially by optimism over a vaccine and some improving economic data. Inovio, ticker symbol INO, said Tuesday it received $71 million from the U.S. Department of Defense to ramp production of the biotech company's smart devices that administer an experimental coronavirus vaccine into the skin. There's also talk of yet another stimulus package in the works, which if that does happen, it will continue to send the market higher. We could very well see all-time highs if that happens. This is certainly not the time to panic, people. And if we've learned anything from the way the market has been behaving lately, then it wouldn't be to run and not walk to find things to buy. And so I have a list of sectors and individual stocks that I think are just no-brainers and should be scooped up immediately. First off, it's the FAANG Stocks. And I know, it's not sexy, but as I said, if we have learned anything from the time that we are in now, it's that these companies cannot be killed and are absolutely worth buying the dip on, in my opinion. FAANG, or FAANG, is an acronym referring to the stocks of the 5 most popular and best performing American technology companies, in case you weren't aware. These stocks include Facebook, Apple, Amazon, Netflix, and Google, or Alphabet as it's known as now. And these are stocks that should be a no-brainer for a novice, but I wanted to point out a few things about them here. Each of these companies have absolutely dominated in a time where we have experienced the greatest economic contractions in our history. As businesses everywhere were laying people off, companies such as Amazon were struggling to keep up with demand and have hired 175,000 people and counting in the last 8 weeks alone. Apple, which is off its all-time highs, has proven to still be relentless and moving forward despite shutting down physical stores and absolutely crushing numbers last quarter despite its low expectations. Netflix keeps adding subscribers with no signs of slowing down, and Facebook and Google are going to become a modern-day Madison Avenue. Companies are starting to realize the ROI on ads in TV or radio are going to become damn near obsolete, and you can get so much more for your money through these platforms. We've seen this over the course of the last 3 or 4 months with everything that's been going on, right? You can reach targeted audiences rather than casting a wide net and hoping to grab a few consumers along the way. Also, Facebook has rolled out Facebook for Business, which includes shopping experiences, 6 different ways to communicate with your customers, and the ability to stay connected with your customers from anywhere. This is going to be huge not only for small businesses in the economy, but for Facebook as well. The Rona outbreak has shifted consumer behavior dramatically, and these high-tech companies have stepped up to keep America running. Right now, investors in these companies have a shot at serious profits, in my opinion, if you just simply buy the dip on them. The next area to look at is the stay-at-home type plays. These are stocks that are going to continue to be relevant even after the Rona is under control, in my opinion. I believe that remote work will be here to stay well beyond just a stay-at-home order, and these stocks stand to benefit. Companies like Clorox, for example. We just spoke about Clorox last Friday, but this company just makes sense. Everyone is using Clorox wipes, and they are also using many products that some people may not even realize are owned by Clorox. The ticker symbol is CLX, and it's currently down to $212 a share from its $219 highs. I stated that I could see this at $250, and I still stand by that. By the way, really quick, I just wanted to invite you over to check out the Chaos Crew. If you're having trouble finding stocks in the morning or just want to get a snapshot of the overall market, click the join button, and each morning, an hour before the bell, you will get just that, a watch list of 5 stocks each and every day and some pretty cool looking badges to go along with it. For $4.99 a month, I think it's a pretty sweet deal, plus it helps support this channel as well. If you think this would be something for you, I would love to see you there. Okay, so other stocks that fall into this category that I really like are Williams-Sonoma, which is down to $82 from its $88 high, and McCormick, which is down to $170 from its $180 high. More people have been cooking from home, which means the need for seasoning is in high demand. You know, it's still hard for me to find garlic here in Maryland. Garlic. I can't find it anywhere. It's crazy. Williams-Sonoma has seen a huge increase in sales as well thanks to their amazing e-commerce platform. Now this next category mixes tech with stay-at-home because I don't think they really fall into big tech with like the FAANG stocks, and they're really not actual stay-at-home stocks that relate to buying tangible products. So I'm just going to go with remote work stocks here. You guys know that I've been a huge believer that working remotely is only going to get bigger from here. The cat's been let out of the bag, the genie's out of the bottle, any other cliche you want to put in there. But companies have been forced into this situation where people have to work from home, and now the light bulb has finally gone off. Goldman Sachs recently reported that 97% of their workforces was able to work from home remotely and still stay just as efficient, if not more, than before. Managing employees was quite easy, and they were able to make trades and transactions as if nothing had ever changed for them. Facebook has already announced that 50% of their workforce will permanently work remotely within the next 5 years. So businesses are starting to realize that they can do this and still be productive, if not more productive. Employees are reporting that they are happier when they can work remotely and are actually less distracted. I mean, how many of you always hung around the water cooler and just BS all the time doing this? Right? This could be a huge cost savings when it comes to leasing out buildings and properties, and it could also kill the commercial real estate sector, though. So I'm not sure I would be down with any of those real estate investment trusts anytime soon either. That being said, the stocks that come to mind are companies such as Crowdstrike and PaloAlto. Crowdstrike has barely budged during this pullback, as it seems it has only come down to $102 currently from its $107 highs, but PaloAlto is down around $223 from its $234 highs. Cybersecurity is only going to increase from here with remote work, and investors know this, and this sector isn't slowing down anytime soon. Related to these cybersecurity companies are cloud computing ones. Fastly is one of my favorite ones. Ticker symbol FSLY has dramatically fallen to $69 a share from $81 highs, but nothing has changed here. In fact, they plan to more than double their growth by the end of the year, and cloud computing will be so important moving forward. Being able to store information so that it can be accessed remotely will be significant and essential to any company. That being said, if a second wave is coming, companies like Zoom and Peloton are still going to rock it. I've been singing Zoom's praises since the low 100s, and people thought I was nuts then, but I'm telling you that this isn't going away anytime soon either. There just isn't a better video conferencing platform out there, period. And I just recently found out that they can now be integrated with YouTube live streams, so the argument about market share just is no longer valid in my opinion. As far as Peloton is concerned, well, they can barely keep up with demand still, and I wonder what it would look like if there actually is a second wave. Finally, there's still the travel industry, and no, I'm not talking about the airlines, folks, because I still think that they may take a while. American Airlines, with their recent offering, are likely to go bankrupt because they just can't simply slow down their cash burn. And no, I'm not talking about the cruises either, because I can't tell someone to buy a company whose debt is double that of their market cap. No, I just can't do that. But looking at the safe ways to travel are worth looking at, and we just spoke about these. The transfer of wealth has been serious, folks, and people are buying up RVs like crazy, and I'm talking about the real expensive ones too. Companies such as Thor, ticker symbol THO, Camping World, and WGO or Winnebago, which, by the way, absolutely crushed earnings today as I expected them to. And look, the story here with these is that people still want to go on vacation and they still want to be safe. And this seems to be the safest way to do it. The bottom line is, guys, you can't let your emotions impact the way that you invest or trade. Always look for what companies should not be down by using a little bit of common sense. Also notice that all these stocks that I pointed out are not speculative in nature or are penny stocks or whatever. They're good quality companies with a lot of cash and can still make you a lot of money no matter what is going on with the Rona. You have to be forward thinking just like the stock market. The stock market is a forward thinking vessel, and understand that there will be more companies that fall victim to this, and you have to be smart enough to know which ones they are. Fortunately, you have this channel that knows how to own all this chaos, and as long as I'm here, I'm going to keep helping you own it too. Let me know what you think about these stocks today in the comments, and if you happen to miss my top 5 stocks under $10, click this video here. And if you wanted to check out my latest stock market showdown where Norwegian and Carnival Cruise Lines literally go into a wrestling ring to duke it out, click this video here. And as always, folks, I will see you all before the bell, and B. Smith is out.